right, good morning. Today is Wednesday, 11/15/2023, November 15th, and a week from tomorrow is Thanksgiving. And boy, what a crazy market we've seen just recently. We've had a significant rally that seems like it potentially caught a lot of people by surprise, but we talked about seasonality a lot on the show. And yesterday was pretty incredible because the CPI numbers came in just barely better than expected. And of course, the reaction to it was astounding. And the funny thing is, of course, you probably saw that, the way that CPI is calculated is kind of changed a little bit, and there was people were questioning the numbers and that type of thing. But the idea, and we've talked about this a lot, is that if the damage has already been done, like the price of everything over the past few years has gone up significantly. And even if, inflation does return to the 2%, rate of inflation, we're still screwed because everything costs a lot more, right? So, interestingly enough, I guess the PPI numbers came in this morning, and they showed that they were actually down, and so producer prices were down. I didn't really dig into it that much, but the funny thing is the markets kind of initially had a negative reaction to it. But anyway, the big rally. Let's take a look at this humongous rally on the weekly time frame. On the weekly time frame, it doesn't seem as crazy as the runaway move that we see on the daily time frame. But this is like the bigger picture here, right? Obviously, it goes all the way back to the pandemic sell-off, the subsequent rally, the bear market, right? And so we get that, that cup and handle we sort of talked about. Um, on some of the indexes, like the Nasdaq 100, which we'll look at in a little bit, has more of a, really more of a sort of a bullish cup and handle. But the thing about it is, when you look at this weekly chart, there's a couple of things that you can see. One is that the rally, doesn't seem quite as outrageous as it appears on the daily chart, mostly because of the breakaway sort of gaps and the gap ups, gaps and goes on the daily chart. But this gives a little bit better perspective on it because if you look at just the past few weeks, and of course, we're only we're only a few days, actually, 2 days in the morning into the current week here, which you see extending above that trend line. But we've seen that sort of thing before, sell off and a few big weeks up. Back over here in 2022, big sell off, little consolidation, and then looks like four weeks up, significant. Um, so it's not anything that's like too insane, although it does look insane on the daily chart. But on the weekly chart, it's sort of typical. What's a little bit different about this one is that there was really no consolidation down near the lows, right? I mean, it did come down and tag this trend line. This is what I call my candlestick trend line here, because the red trend line there, like if this was a candlestick chart, that would make a little bit more sense to have the trend line. That was sort of the big kahuna drawn across like D lows. But anyway, so it came down, found support on the trend line and bounced, and extremely significant bounce, by the way, without a lot of consolidation at the lows like we saw over here. Several weeks of probing the lows, it just basically came down and turned right around. So let's see what it looks like on the daily chart here. This is pretty outrageous. Big sell down, broke the, broke this trend line. That was the trend line at the time. I just left it on the chart there. There we go. Zoom back out. That goes from the October lows across the lows of earlier in the year. And so that was the trend line everyone was watching. And of course, it broke it, found some support right around the 200 day and bounced. And then when it took out the 200 day and this zone of support, man, everybody got extremely bearish here, which kind of makes sense because I mean that's how technical analysis works, right? Is you break a rising trend line, you break a zone of support, you trade below the 200-day moving average, but the turnaround was just absolutely incredible. That's probably, I mean, you don't see this too often, really, with sort of the breakaway runaway gaps, right? I mean, you had a little gap up here and a rally, and so remember I talked about looking at like the space between the bars, like you see these sell downs that get extended, and you get like a pivot low, a couple days goes by and you look at sort of the space between there. So, there's an example back in the summer, that first sell off the highs, where you had sort of a similar pattern, but I think where this one right here, this day, is what probably caught most people off guard, including myself, because down here around the lows, you kind of don't expect it to just ricochet, right off of that and continue like that. And so then we got up here right at 4,400, and there was a gap, which you can see a little bit better on the SPY, but this gap right here, kind of expected that maybe it would form like an inverse head and shoulders, right? Because there was some resistance there. And then it's interesting how on Friday, like the high was right at this trend line here, right? And so that was another resistance point, right? So, I mean, there was like no resistance on the way up. So I have to think a lot of it was short covering. And of course, there's all these stats flying around. Hedge funds were the most underexposed that they've been in a long time, and that type of thing. And there was probably, tons of shorts. But anyway, was sort of the yesterday was kind of the strangest of this whole move here. I mean, this move is not unlike things we've seen before. We haven't seen a lot of sort of V bottoms in a while, and especially the sentiment was like really negative down here too, which makes a lot of sense. I mean, the market goes down. The market had been going down since the summer, and then it really started tanking, broke all the levels of support that there was practically, and then for it just to turn around and just rocket higher, I think was something nobody was expecting. And yesterday was just incredible, right? I think the S&P, well, it was up around 2% yesterday, and so can't see it on the chart, but I'll pull it up a little bit. So, I'm not a huge believer in RSI, because I see the RSI get overbought, and price just keeps going. But at the same time, when the RSI does start getting overbought, it's a little bit of a warning flag, kind of just like the RSI down here got buried, down around, I guess that's 30. So my old charts, I could do a lot more with this RSI, but it is what it is anyway. So looks like the RSI got down to, bouncing around 30 near the lows, and of course, the actual low. See, I can put there we go, just for the fun of it. Yeah, it looks like right around the actual low is where the RSI hit 30, and then of course it turned around, and so here we are now, and I can't tell you the exact value of the RSI now, but it's up around, looks like it's bouncing around 70 again. So you look back here, and you can see that it got quite a bit overbought, and the market continued to go a little bit higher for a while, but it's just one of those things. So the market was extremely oversold, and that was no mystery to anybody. And here we are. Now the market's overbought. And so It'll be interesting to see, how much whether we got, like, they talk about seasonality and end of year rally and all that. So it'll be interesting to see how much of that's already been front run, so to speak. Um, I would expect I would expect some consolidation and perhaps some backfilling. And geez, we got these gaps here, so you can see other gaps, plenty of gaps on the chart. Well, that there's one that got filled right away, but there's a gap, and the market just continued higher, and eventually it came back down and filled that gap. So in this gap here we just talked about, just got filled. So anyway, just wild price action. Actually, let me go down to, and this is even more sort of uncanny because we've been looking at this. Here we go, my IWM chart with the with all this support and resistance marked on it. This is pretty uncanny because, as we've been noting for past weeks, how these support and resistance zones have been playing out, just amazing. And so here, once again, it went all the way from, the big resistance zone down into the support area, and then bounced right off of it. And now it's about halfway, right? There's the 200-day moving average. So the Russell's right up against 200-day. Typically around this time of year, I think I mentioned this last week, is when the small cap Russell 2000, you get a lot of animal spirits, a lot of action in the small caps right around this time of year. Obviously the Russell's got a long way to go to do anything meaningful. So if for whatever reason, so you can see there's the all-time high way up there. And that was in 2021, right? Fall of 2020. That was a couple of years ago. So anyway, it's still. I saw a lot of posts yesterday about how the breadth of the market was really good, right? Which kind of makes sense. I mean, everything rallied based on that, based on the CPI number, but the breadth of the rally was indeed, you get a 2% up day in the market, and you would expect that most stocks would participate in that. So I think that, well, I don't think, I'm pretty sure that the Russell 2000 was up like 5% yesterday, right around 5%, which is just astounding. But at the same time, it was coming off of these extremely low levels, and so like everybody knows, the percentages get bigger when the price is lower. You tend to get these exaggerated percentage moves. Like you'll see a stock that's down 80% and then it has a 10% rally, but you got to put that in perspective when you look at the chart. So pretty incredible. And the other interesting thing is how this looks so much different than the other indexes, right? I mean, it pulled back and hit that support zone, and then you got the breakaway gap here day, and then it came, it came back down, whereas the Nasdaq and the S&P didn't come back down like this, right? So until that CPI number came out, this thing looked like it was headed back down to sort of do some consolidation and do some work near the lows. So let's look at the Qs real quick. Yeah, this is pretty amazing. So the Qs themselves are probably better to look at a weekly chart of this. Yeah, at least to start. Whoop. Some time ago, I used to be able to scroll my mouse wheel and zoom in and out on these, and you can't do that anymore, which is really weird. So, I at one point, I guess I didn't save the chart, but I had sort of a bull flag drawn across these highs and these lows. It was a really nice symmetrical channel, and you can see it's trying to break out of that. So there's your big sort of proverbial cup and handle, and it's breaking out. It's going to be interesting to see. It's going to be interesting to see if it can, if it can come all the way up and retest these highs here. So let's look at COM. Whoops, typed that wrong. There we go. So let's look at the actual NASDAQ composite compared to the NASDAQ 100, compared to the Qs. It's a little bit different picture. You still got the cup and handle, but you'll notice that this is a lot lower than the actual NASDAQ still got a ways to go to get anywhere near these highs, whereas the NASDAQ 100, which is extremely heavily weighted, probably, close to 30% in the so-called Magnificent Seven. So that just gives you a little bit different picture. This is, quite frankly, this is a pretty constructive chart here, but you can see that it's still got a ways to go just to get to this prior high here from over the summer, and it's got a long way to go to get to the highs, whereas back to the NASDAQ 100, you can see that right now as we speak, it's pushing these highs, and it's not going to take a whole lot to get it back to these highs. So it's all going to be about, how and the other thing is, seasonally speaking, this is the strongest time of the year, so it's not going to surprise me to see this. Here's the thing: is there's not a whole lot of weeks left, right? If you look down here, you see this line right here is 2024, so there's a limited number of weeks left, and it would be really surprising to see it just make a straight beeline for those highs, right? I mean, at some point here, it seems like it's ready. It's overbought. It's not overbought on a weekly basis, by the way. Well, my chart's a little bit skewed here. That happens sometimes when I flip around these charts, because I have different indicators on them. Anyway, you can see here's 2024. A few, I guess there's about 7 weeks left, something like that, for seven something weeks, and of course, we got the holidays in there. So, but yeah, we could get a little bit of backing and filling. So it depends on what they do. Back to the Russell. Looking at it on a weekly time frame here. Nothing really that astounding, to be honest with you. It's sort of just like a channeling pattern, and I'm going to say that it's about, without drawing a fib on here, it's close to about halfway in its little channel, and so it is what it is, right? I'll probably need to extend that out, try and keep it about the same spot I had it. So extend that to 2024, extend that to 2024, and there you have it. So it'll be interesting to let me save that real quick. Oop. I did it on the wrong well, I'm not going to worry about that. I need to save it under my other thing here. But anyway, long story short, it won't surprise me. I mean, this could back and fill a little bit, but you can see that, once it, like back over here, right, in 2022 over the summer, hit the lower end there, bounced around, and then it made a straight beeline for the top there. So it won't surprise me at all to see this at least, try and push up. So say 3/4 of the way up into here. So it's probably, I would say the best thing that could happen right now is that the overall market kind of, consolidated a little bit, spent some time backing and filling, that type of thing. But it's going to be interesting. Keep your eye on the small caps, because they tend to be really strong around Thanksgiving, and especially between Thanksgiving and the holidays. So let's see. I wanted to look at ARK. Of course, I'm on a weekly chart here, right? So this is sort of as you know, my proxy for this is my proxy for animal spirits, growth stocks, what the majority of like when you start picking individual stocks, especially like the type of stocks that people like to speculate in, this is a good proxy for it. You can see that it's just not all that exciting. I mean, this latest rally off of the low, these couple of weeks here, don't even look like they don't even look like much happened. But when you flip over to the daily chart, you see the same sort of thing, just incredible. I mean, percentage run, this thing's up like 25% roughly from these lows, this latest run here. So that's pretty incredible. But again, you know, aside from the gaps, we've seen other runs like that. You see these days where it just kind of takes off. So I mean, that's what momentum is all about. That's the whole idea that you know big momentum shift, based on economic numbers and based on overbought, oversold, and positioning and flows and all that kind of thing. So it's interesting because there's a lot of debates about how strong the economy is. There's a lot of debates about whether inflation is whipped or not and that type of thing. And so everything is sort of subjective right now, right? And to see these incredible moves, I wanted to look. There's a couple of, just off the top of my head. There's a few stocks that ARK is real keen on, like this Zoom here. I always look at this because, yeah, I mean, so look at that. Huh, pretty nice run here. Let's look at Tesla. I think ARK is, I think she always talks about, Kathy Woods comes on TV and talks about Tesla. And then I swear that I saw that they were actually, while she's hyping it up, they're selling it. But yeah, Tesla 400 to 100 to 300 to 200. I mean, percentage-wise, these are some crazy moves. But yeah, it's made a pretty good move here. Huh, interesting. There's one stock that I was looking at the other day. Yeah, this Hershey. Like there's something about this long protracted sort of pullback here. I mean, when you zoom out on this, look at this. This is huge uptrend, and then just an extremely persistent move down with there's the 50-day moving average, right? So you had that couple little bounces along the way, and so just kind of an interesting chart. This is actually kind of a nice looking sort of swing trade pattern. So ideally, I can draw a trend line down here. Ideally, you get a little bit of a pullback here and some consolidation, and this is a pretty constructive chart, to be honest with you. I kind of like the look of this. So I don't know that I would chase it here, but the thing of it is that for whatever reason my phone keeps going off here. Yeah, so anyway, this might be one to keep an eye on, somewhere back in like this zone on a little bit of a pullback. Might be an attractive entry point, or yeah, like I say, I don't know the percentages. This is a pretty tame stock on a day-to-day basis. And so percentage wise, I mean, 190, 200, but if it came back in a little bit, that might make an attractive first entry somewhere, in the middle of here, close to 190 if it got there. And then a break above today's high would make a decent second entry point. But obviously it could just turn around here. But I think it looks like it's a great pattern though. That's sort of as I look around charts, this is one of the nicer patterns that I've seen in a while. So anyway, take a quick look at just the old SPY. A quick look at the SPY here. Yeah, the yesterday's move, I mean, it's going to run up into resistance. It's overbought, and so when that happens, the funny thing is that a lot of times the opposite of what makes sense sort of happens. And going into yesterday, the market was already kind of overbought, and so part of what I've learned over the years is that the market tends to, well, and it's an old adage, right? It tends to do the opposite of what most people think it will, and then like you get into a run like this and you think, my God, it's overbought, it can't go any higher, it can't keep going up, and it does, right? And so I mean, it just feels like it's going to squeeze out every last short, and then as soon as everybody throws in the towel and says, oh, we're going back to new highs, I'm bullish again, starts putting money into it, then you get a real sharp sell off. But it's pretty incredible because even after, and then there was some statistic, like going into this week, there was some statistic that's something like 18 Mondays in a row. It always went up on Mondays and this type of thing. So pretty incredible. I mean, this run, and you would think that after yesterday that it would be due for a little bit of pullback, but I call it inertia. Once the inertia gets going, then it tends to keep going. So look up the definition of inertia. Anyways, I'd like to keep going on, but apparently I got some people trying to get hold of me, so I'm going to wrap this up. Anyway, we'll see what happens. Now's probably not the best time to chase, but it just depends. There's a lot of beat down stocks that I think I think the very next pullback, if we get one. So, and see, that's the other thing. They think, oh man, I'm just going to wait for another pullback, and then that pullback doesn't come. So anyway, it's going to be interesting to see how this plays out. And join me here next week, same time, same place, and it'll be the day before Thanksgiving. Or actually, yeah, it'll be the day before Thanksgiving next week. So I'll see you back here then.